A common question in trading is which is the best approach, price action or indicators trading. So in this video I'm going to give you some pros and cons regarding both of these approaches from my personal experience and hope you will get the answer you're looking for. So first of all, let's see what each of these trading methods means and how they differ from each other, and then we will talk about pros and cons. So what is price action trading? Price action trading is a method that focuses only on the clean price chart. You are analyzing the price movement, candlesticks, trends, support and resistance zones, and chart patterns. So you can clearly see the candlestick and exactly what price has done and is currently doing. By focusing on the price and not using indicators that are basically derived from the price action traders are able to identify the earliest stages of the price development as trend continuation, trend shifts, or ranges. So trading decisions are based on the price analysis using channels, trend lines, support and resistance zones, and structural levels. Therefore, there are two main advantages of the price action trading. Flexibility, which means that the price action trading gives you more control on your trading decisions because you are making them on your personal analysis. Another important advantage is the adaptability, because using the naked charts you can adapt your trades on the current movement of the price, and this is an advantage over the indicators trading, and that is because when using indicators you may still receive buy signals, for example, even if the price action is telling us that there might be a trend shift. As disadvantages of the price action trading, I am sure that the most important one is the subjectivity of the price interpretation. This is a common nature of this approach, and I am sure that you, as me and many other traders, saw somebody else's analysis and trades and wonder why that trader decided to buy instead of sell, or why did that person even open the trade at a certain price. So if you decide to use the price action trading, you have to know that in the same period of time and trading the same Forex pairs, there is a huge probability for you to have different results than other traders. And this is quite frustrating, especially for the beginner traders. But first of all, you have to stop comparing yourself with anyone else, because every single trader has its own set of rules, and you as well have to develop your own based on backtesting and of course on your experience. Before moving on, I would also like to recommend you a great price action book that helped me a lot in my learning process. The favorite one is for sure Naked Forex, which is useful for beginners and experienced traders as well. The first part is presenting the basics part of the price action trading, and in the second part you will find some great strategies which can be applied on any time frame. Okay, now having this info, let's see what does indicators trading can offer us. As you may know, the indicators are a set of tools applied to a trading chart, tools that are derived from the market price. They are actually mathematical and statistical formulas based on price, and in some of them we have also information as volume, so indicators lag behind the price. One of the advantages of the strategies based on indicators is that they are easy to learn and the signals generated by them are clear and straightforward. They mean the same thing to all of the traders which are using the same strategy. Also, trading using indicators is not subjective at all. For example, if your strategy tells you to buy when there is a cross of two EMAs and the RSI is oversold, you do so without further analysis. Apart from that, there are also some disadvantages of trading indicators, and the most important ones are the late signals and of course the false signals. As I previously told you, indicators lag behind the price, so traders lose some part of the movements, meaning that you sometimes may receive late signals. Regarding the false signals, You have to know that there are times when you receive a signal, for example a buy one, but as I previously told you, if your analysis of the chart from the price action point of view, you can clearly see that there is a trend shift. Now, having in view these pros and cons, the most important conclusion is that trading indicators is easier and faster to learn. It's a better choice to beginners, but it's used also by experienced traders as well. But this convenience doesn't mean that it's more profitable or less profitable. In terms of profitability, I know traders that make huge profit from both approaches because after choosing the way of trading, they actually master the most important parts of trading: risk management and discipline. So coming to the main question, which one is better, price action or indicators? I can say that choosing between these two approaches depends on your personal style as a trader. Each of them can be considered good for you as long as you can make consistently profitable. But from my point of view, a combination between both of them, a mix of price action concepts and indicators, can lead you to develop really great and profitable strategies. Also, by doing this, the strength of one approach can cover the weaknesses of the other. In my trading journey, the indicators trading made me more disciplined, and the price action concepts kept me away from the false signals given by those indicators. I think that's it for today. Thank you for watching and following our journey. Please don't forget to subscribe to our channel and to like this video. See you in the next one, and of course, until then, trade safe and trust the process.